Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook, and I'll be your host for about the next 20 minutes here. We're going to have a short and sweet Options Guide TV. We have our trades placed on we put on an NDX trade on Friday, and then we looked at an NVIDIA trade on Monday. So we're going to review those trades. One's doing well and the other one isn't. And take a peek at those trades and then see how we're going to ride into the end of the week. So today is Wednesday, June 5th. The markets are open and rocking and rolling. And we got some good numbers today. This is another situation where bad news is good news. According to ADP, some of the job growth and wages are slowing down a little bit. We're going to get the government number on Friday for jobs, which is the non-farm payrolls, and that's more looked at and probably more important as far as the Fed is concerned. But right now, there's some indication that jobs are slowing down a little bit. They've adjusted some numbers, and the market took that as a positive. And that's the one thing that the market needed. The market was really in a period of chop where couldn't really decide if it wanted to go higher or lower, and it really needed something to push the market forward. And I feel like the news that we have today, especially if we get a follow-up on Friday with the same type of information that the ADP report is indicating, that it could be the move that we need to get back towards the all-time highs in the marketplace, which is fine. We reached them. We breached some all-time highs in most of the indexes, the big exception being the Russell 2000 index. And when we did that trade, what we ended up looking at is, as far as the indexes are concerned, we kind of got a little bit of a sell-off because that has a tendency to happen. It did. One of the things that I found very interesting about the NASDAQ and also the S&P 500 index is that as we were approaching all-time highs, we just really didn't hang around that number at all. We blew through it and then we blew back down. So that area, which is usually a level of support and resistance after your breakthrough, just really didn't seem to be the case anymore. So right now, we finally have some bullish moves. You can take this as a bullish sign in the marketplace, but even though it was overall for the worker fairly bad news, well, it wasn't horrible. Let's just leave it there and we'll move on. So our NDX trade, since we put the position on, the NDX has ran over 3%, 3.2% to be exact. We put the trade on, the NDX was at 18,280. And right now is, as you can see, let's show the TradeHawk software. We're actually at 18,893. So even a little bit higher than where I was looking at when I first started making some notes here. So 586 points or 590 points, somewhere in that range, the market has moved in the NDX. So we talked about it on Monday's show about making an adjustment. It was a real tough timing to try to decide if we wanted to do that. But the NASDAQ has shown strength. NVIDIA has been strong, and that's a big part of the NDX. And that stock has made a big run up, and we actually did a trade in NVIDIA, a bullish trade, heading into their 10-for-1 stock split. So right now on the position, we put it on for a net credit of $2.40, and we're currently showing that it's trading at $14.85. So we're down. That 14.85 means to buy it. Well, now it's gone up a little bit. We're at 16.50 right now. And this is the trade that we had on. We bought the 18,720s, sold two of the 18,750s, and bought one of the 18,810s. Now, if you're doing this trade and you were doing it as a hedge, one of the things that we could have done to adjust the trade is to make this a short call spread. In other words, you would close out the expensive leg, which would have been the 1720 leg, and buy back one of the 1875 legs. So by removing that, and that's a bullish long call spread, you would have been short the 18750s and also long the 18810s. Now, that would have been an alternative to take some of the money off the table by selling that long spread and then hope that it would stay below that 18750. That didn't happen. So it was a good thing that we didn't make the adjustment. But at this point in time, we've blown all the way through this strike and gone above and beyond. The market right now, on using the highlighter inside the options grid for the TradeHawk software, we're seeing the market the most at the money strike is the 18890s. So we're all the way through. We got a few days left on the trade. If you wrote it this long, you would just take it out. On the this morning it was trading at 1885. I think that this is a fairly substantial, uh, as far as the charts are concerned, as far as the feeling in the marketplace, I don't really think that it's going to come back through. It's already blown through all of our strikes. We would have gotten out earlier. Our rule is if you do a skip strike butterfly and it gets to our middle strike, you always take it off at 18,750. The only exception to that might be the very last day when you have time decay really working for you. But in this instance, that's when we would have shut it out. But right now, if you closed it off, you're talking about $1,650. We brought in $240. So you can do the math there. That's what the loss would have been on this trade. Um, not a it's a tough adjustment. We were quite a bit out of the money on the trade. The strength of Nvidia really pulled the Nasdaq market forward. So we actually looked at doing a trade in Nvidia, and let's look at that trade now. So, actually, I have this all set up in the what if calculator. So let's take a peek at it. So to kind of highlight where we're at right now, this is the last trade in the Nasdaq, and it's all the way up here. This would be if we put the trade on as of today, but this is where all our risk is at. Since we've blown through, we started, the market was way down here, we went all the way up, blew through the short strike, which at that point in time, you want to just get out. If we were trading right around here, we could have done an adjustment to the trade, but the adjustment wouldn't have helped us out here in that the market just kept going up and stayed strong. We're all the way up to this level. And now you have the difference between here and here. So the maximum risk on the trade is 3,000. We're trading at about half of that maximum risk. Get out of the trade, close it. There's no real reason to try to stick around. We're in the period where you're going to have a huge rate of time decay. And if anything, what I would end up doing here is actually a 2-day NDX trade, which we did a few days back, about a week back, and that trade turned out well. So if you have any questions, you can put them in the chat box if you're in the Tradier YouTube channel, and I'll try to address them on the show. And if I'm going to do anything on this trade, what I would end up doing is piling on another trade up in this range on the NDX. So if it continued on up, it could help you out on the trade. And if it continues on down, it's going to help you out this way. And you would end up with a double butterfly on the trade. And that would be a desperation play to me. I think you just want to get out of the trade at this point in time, see where the market's at, see if we let the market reestablish itself. I do feel like it's going to be more bullish going into Friday's close, which is this expiration date on this trade. So let's go back and look at the NDX or the Nvidia trade. One second. NVDA. There we go. And as we look at that trade, when we put in the Nvidia trade on Monday, we did that. The market in Nvidia was at 1,132. We're now at 1,198, now almost 99. They're just hit it. And if it's at 1,200, the 10 for 1 stock split that's going to be coming on June 10th is going to be effective on June 10th. You'll see the stock price divided by 10. It'll be trading for around 120 at that point in time. We decided to do one last trade in the expensive option contracts based off of the high price stock. That's the June 7th expiration. There were 2 days remaining on it. And we came in and bought the 1,115 strike call, and we sold the 1,125 strike call. So let's scroll on down here. 1,115 is the one that we bought. 1,125 is the one that we sold. So that is a 10-point wide spread, and it's currently trading for, well, 950. Then that's about where I would want to get out. To stick around 2 days and have the risk of Nvidia going into a stock split, I don't really want to stick around to try to capture the last 45 cents in this trade. So the way that I would close this position is you would look to sell to close the one that you own. I'm going to have to click open or else it's going to give me an error. And I'm going to buy to close the one that you sold. So I'm going to click open. And you'd be doing it for a net credit to the account of $9.55. We put the trade on for $5.50. We would be up for $400 on the trade. Decent trade over a couple of days. The NASDAQ trade obviously kind of wipes out the Nvidia trade. The one thing that we did on the NASDAQ is we put it together on a Friday, looking for a little bit of an extra time decay, and that ended up hurting us because the market did kind of establish itself a little bit more bullish on Monday, and then the market has stayed strong. Was looking for a little bit of a bounce off of some resistance to the upside, and that's not happening. A little bit of a channel that was hindering the marketplace. That did not happen. Nvidia has stayed strong. You look at all the drivers of the NASDAQ here. We have Apple, Meta, Microsoft, and Nvidia all strong in that range, including Google. So a lot of these of the Meg 7 are doing extremely well, and that's driving the NASDAQ higher at this point in time. We even got Meta up 2.5 today, Nvidia up 3, Google's up 1. AMD is up 3.7% today. So solid markets across the board. All right. Well, I'll go back and I'll look at a NASDAQ trade, and maybe this would be a desperation play, but we're going to do it on paper. This will not be an official paper trade because I really think I would just close out of the NASDAQ trade at this point in time. Would have closed out when it hit the short strike. But I'll go in and look at a 2-day trade in the NDX. And we have the June 7th expiration up. And let's do the same trade. We're going to go about 1 standard deviation out of the money. We'll look at a $3,000 requirement. Market is right here. Well, if we can do a $2,500 requirement, which it's all about the 5-point strikes. Nope, we're going to have to do 3,000. So if the market's at 1920, that's the one that we're going to buy. We're going to make the math simple. We're going to go out and look at the 1930s, 30 points wide, and we're going to buy, we're going to sell 2 of those. And then we're going to skip the 19,260s, and we'll go to the 19,290s, and we'll buy that one. All right, so we're getting a midpoint credit of 140, and considering we're basically out of the NASDAQ trade, We'll put this one on so that we have a talking point on Friday. The NVIDIA trade, we got out of that one. You might do a rinse and repeat. Don't mind trying to do the same trade, but you're going to have 1 day to adjust it, which would be on a Thursday. So we can set it up. We'll go back in. I'll grab this trade. Let me send that to the what if calculator so that I have it. And we'll do 2 short-term trades going into Friday for the end of the week for here on Options Guide TV. We'll zoom in a little bit here. And this is where we're starting at. We got the market right here. It's going to hurt us if it goes against us right away, but we only have 2 days. So by Friday, at this point in time, the market's going to make a turn up. And then if we add some hours onto this, so let's go 1347. Now the trade's going to look even a little better. And then by the market close, well, I guess we'll add another hour. Let's go 1437 or 1417. And then we start to turn up. And if we land anywhere within this 60-point range, we're fine on the trade. So I do like, with the NASDAQ being such a high price index, doing them a little shorter term can sometimes be helpful. We needed to adjust the trade, but the adjustment would have hurt us, to be honest. If we'd done a normal adjustment in the NASDAQ by rolling into either a short spread, or the only other thing is we could have rolled it up and out, but that means that we take that loss and we still have all the risk on the table. Let's say in general we closed out that trade this week, and now we have this trade on. We're going to watch it, and then let's go back and do a rinse and repeat on NVIDIA. This is the last week. June 7th is going to be that expiration date, and we'll do one more on in NVIDIA, and we'll do the same type of trade where we'll have an adjustment tomorrow. If the market goes against us, we'll roll this into a butterfly. Talked about it on Monday's show. If you want to go back and check that out, check out that archive. But we got the market right at 1200. We're going to come in here and buy the 1190s and sell the 1200. We're going to pay, we paid $5.50 for the last one that we did. That was very similar relative to the at the money strike. Now we're paying $5 and let's call it 40 cents. I saw it at 40. Let's leave it at 40. And that will be our official paper trade. That means we can make, it's 10 points wide. 10 minus 540 is $4.60. So that's going to be our trade. That'll be our second paper trade of this week in NVIDIA. So if there are any questions, please feel free to put them in the chat box or pop them up if you would like. And that's going to be it for this edition of Options Guide TV. Thanks for stopping in. We'll be here Friday at 11 a.m. Eastern time to see how these additional trades look and work out for the end of the week. And if you're on the YouTube platform, please click subscribe and ring the bell. If you're on X, that's great. We're now streaming through x.com. And then, as always, you can check us out inside the Tradier Hub and see all of the speakers that we have, the plethora, a whole bunch of archives that are available. The recent summit that was done with the Chicago Board Option Exchange is available. All you have to do is check out the Tradier Hub. Thanks for coming, and we'll see you Friday.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.